welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra. Things are going very strong for the markets at the moment. In fact, for now, the Nifty is holding well at the 18,066 mark and the Sensex well above 60,500. But very quickly, let's invite our first corporate on the show. We are joined now by Brijesh, the Chief Financial Officer of Thomas Cook, to discuss demand trends, the business outlook, etc. The company has a positive guidance and expects a strong bounce back in growth across segments in the coming quarters. Brijesh, thanks a lot for joining in. You know, travel has come back in a big way, right? Whether it's corporate travel, international, domestic travel for personal use. So I just wanted to ask you, what is the data suggesting at the moment? Are we back to pre-COVID levels? And how has the festive demand been so far?
Yeah, good afternoon. So you are right, the demand has come back. And if you look at various segments of travel, in fact, the corporate travel, which a lot of pundits had predicted that it will go away forever. You know, corporates will not travel, but it's all wrong. Corporate demand has come back, corporate travel demand has come back, and we are actually higher than the pre-pandemic level as we speak. If you look at the domestic tourism has already reached the pre-pandemic level, and as the trend suggests, we will exceed that as well. If you look at the foreign exchange business is registering about 75% of the recovery, and the balance is pending because of the fact that there are visa-related issues in certain countries, as we know, certain European countries, US and Canada. But as we speak, these are being eased out. We are in touch with the consulates and they are taking their efforts. As far as the international travel is concerned, international travel in this quarter, June quarter and the September quarter trend is recovering in a big way. We expect about 40% recovery versus the 18% recovery in June. And this is still muted because of the fact that visa-related challenges are there. But interestingly, some of the destinations, offbeat destinations like Baku, Almaty, Vietnam, Cambodia, South Africa, Mauritius are really picking up. And we are focusing on these countries where visa-related challenges are not there.
Okay. All right. Brijesh, I just wanted to actually push that point forward with regards to what you are seeing when it comes to your entire export business. That's simply because we have a depreciating rupee. We have the rupee, which is currently at 80. We have a gas crisis, which Europe is facing, Russia, Ukraine, though things probably seem to be getting better there. When it comes to the entire developed world market in terms of business, how badly have you probably been hit compared to pre-COVID levels?
If you look at our foreign exchange business, which is the buying and selling of currencies through the physical currency as well as cards, we really haven't seen its impact on us. Yes, you are right, the rupee has depreciated to about 80. But the fact is, student remittance, we all are aware about the rush that we are witnessing in terms of studying abroad. So we are seeing a growth in the student fee remittance. We are seeing a growth in the money transfer to relatives and friends and etc. We are seeing increase in the corporate travel side. So what is happening is this overall rupee depreciation is not really impacting us in any form. In fact, we are not seeing that trend in our leisure international also. People are traveling. People have given an important place of travel in their overall life, and especially post the COVID, we have seen this new trend emerging.
Okay, can you give us some numbers, Brijesh? In Q1, your revenue growth was pretty solid. Of course, it comes on the back of a really low base, right? So you're sitting at almost 980 crores of revenues. What kind of growth are you penciling in for the rest of the year? And also in terms of occupancy levels, on an average, what do you see for the rest of the fiscal?
Right. So, as I mentioned, the September quarter recoveries versus the pre-pandemic level are definitely higher than what we had seen in June quarter. And that's across all the businesses. And we expect that by December quarter, all the businesses who are yet to be recovered fully will get recovered to the pre-pandemic level. And March quarter will be the quarter where we will see a higher number as compared to the pre-pandemic level. While I cannot give a profit forecast or any guidance, but we are seeing a quarter on quarter a very decent significant increase in all our businesses, not only in India, but various businesses that we have across various parts of the world.
Can't give us a guidance, Brijesh, but I'm just trying to get some average, because The last 4 years, if you look at it, it has been so volatile for Thomas Cook, right? Before the pandemic, your revenues on an average were about 6,000 crores. That fell to less than 1,000 crores in FY21. In 22, you were about 2,000 crores. So on an average, what do you think you can do? What's a sustainable growth in revenues?
Right. So financial year 22-23, since that year will have a recovery which we would witness in a phased manner. Obviously, we won't reach to that number of 6,000 that we saw pre-pandemic. But we believe that in the financial year, the next financial year, which is 23-24, definitely not that 6,000, but we will exceed that because some of the acquisitions that we had done will also start firing in that year. For example, the DigiPhoto acquisition that we had done in 2019. Since then, they have been on expansion spree with a lot of contracts and all. So, yeah, so we believe that 23-24 will be the year where we will actually cross that number that we were seeing in pre-pandemic.
Okay, Brijesh, I just have two questions which I just want answers to. One is that overall, in terms of guidance, if you had to give us an assessment in terms of corporate growth as well as recreational travel, which one do you see which is probably going to have more potential in terms of growth, as well as domestic versus your, say, export business or international travel?
Corporate travel, as I mentioned, has already reached the pre-pandemic level. And with the new clients that we have acquired during this period, last several months, is going to add further to it. As far as the international is concerned, there is still a potential because, as I mentioned, the major countries like UK, Canada, US visa issues continue. And we believe that in coming months, this will rise in a significant manner. In fact, the new trend that we are seeing is that typically in September quarter, the international travel and the overall domestic recreational travel taper down because of the colleges and schools start. But we haven't seen that trend. In fact, September is actually equivalent to the June quarter. And that's a new trend. So people are now traveling across and we see a lot of potential still there to tap the newer countries and etc.
What is your cash on books? You have a strong cash on books as well, Brijesh. What is the plan? What does it currently stand at? I think as of June, it was at least over 800 odd crores. Where does it stand right now and what is the utilization plans?
Yeah, so in June quarter, you are right, we were at 850 crores. And this we are using for our working capital management. There is no expansion plan as such other than the normal expansion pertaining to our distribution channel. We are investing a lot in digital, in technology. And since the B2B businesses, corporate businesses have increased more than proportionately as compared to the B2C, there is a need to fund them from a working capital point of view. So we are using that for working capital as well as the technological additions that we want to do.
Okay, in one word, Brijesh, can you perhaps post a profit this year? I know it's too soon, but either in FY23 or FY24, can you turn back into profitability?
FY23, see, look, in the first quarter itself, the June quarter, if you look at the standalone numbers, the Thomas Cook standalone, after 3 years, it came into a profitability. And if you look at the consolidated numbers, it was a meager loss of 2.3 crores in June quarter. And with the recoveries that I mentioned, we believe that this will definitely help us in at least maintaining what we did in June quarter and grow further from that.
Okay, Brijesh, we're going to leave it on that note. Thanks very much for joining in. It's really inspirational to talk to you. Maybe we'll plan our next holiday after this conversation. But nonetheless, that's Thomas Cook. Stock has done well in the past 1 to 3 odd months. I just want to point out one particular stock before we slip into that break. Zydus Life should come up for you because they have received approval for Revlimid generic, which is basically that blockbuster oncology drug. We have been highlighting that there have been multiple companies which have received approval in the past couple of days. Dr. Reddy's, remember, has launched it already with exclusivity on 2 strengths. We have Cipla, which has received approval, and now Zydus Life. Remember that they all have different arrangements with BMS, which is basically the innovator of the drug or the patent holder of the drug, to launch this particular drug at different timelines. So Zydus Life is not moving because the street has factored in that, yes, they could probably make some money from Revlimid generic. We don't know when they would probably launch, though.
Welcome back to Halftime Report on CNBC-TV18. For now, the market is charging ahead. But I just want to put a word of caution. There are a lot of stocks that are seeing about 15-20% gains. So need to be a bit cautious here. So names like, Gujarat Apollo, Coffee Day, DB Corp, Gayatri Projects, SMS Pharma, KRBL. These are all names that are up between 12 to 20% for no real reason. A bit of euphoria in the market, so better to just stay cautious and perhaps stick with quality is what is advised. But talking about quality, this is our special segment Insight Edge, where we talk about different stocks and why they are rallying. So we're focusing on M&M today. There was an analyst meet that the company had yesterday to talk about their latest foray into the electric vehicle space, the new EV XUV 400. Now, these are the key takeaways from that meet. They said that after the XUV 400 launch, which has taken place, they plan to launch 4 pure electric vehicles over 2024 to 2026. The XUV 400 will be officially launched in Jan of the next year. After that, there's an XUV E8 electric vehicle which will be launched in December of 2024. So there'll be a gap of a year there. They're investing 9,000 to 10,000 crores, 9 to 10,000 crores for the development of all the electric vehicles, whether it's the XUV E8, E9, BE05 and the BE07. And they guide for 25% of their SUV sales will be electric vehicles by 2027. This implies an annual volume of 200,000 units at the higher end. Now, they plan to stick to this B and C category segment in the SUV space. They don't want to enter the luxury EV space because they're saying that this B segment and C segment SUVs has a collective market size of 98,000 per month. So they want to capitalize on that. And the electric vehicle penetration in this B and C segment SUV space is just about 3.5%. So they see big opportunity over there. Brokerages, as we've been telling you, have been extremely bullish on Mahindra and Mahindra for a while. These are all the brokerages and their target prices, much above the current market price, anywhere between 1,400 and 1,567. So that's an update on the electric vehicle foray by M&M. Big money is being spent by them, about 9 to 10,000 crores to develop all these electric vehicles. But in continuation with our Value Plus segment, Ekta is focusing on Fortis Healthcare and the key takeaways from the conversation that we had with the management. Ekta.
Well, yes, we had an interesting conversation with the management of Fortis, while the key reason for this conversation was basically acquisitions picking up within the entire hospital space. We'll get to that in just a bit. The more important point in terms of the conversation is what is taking place when it comes to the Supreme Court verdict on the IHH open offer, which was expected in the month of August. Remember, it's been pending all the way since December 2018. Now, the company says that the hearing on the open offer has been completed. They are awaiting a judgment. The judgment, in fact, on the open offer could be possible within this month itself. So within the month of September. They had indicated that it would probably come in August, didn't come in August. So maybe September is when we could hear something on the open offer. There is a judge who is expected to be retiring as well. So maybe the possibility is that we could probably hear the final verdict on it. IHH, are they probably looking to exit Fortis considering the amount of uncertainty, the fact that the open offer has been delayed for so long? No. The management says that they are committed to Fortis. They are not looking to exit Fortis. And internal expansion also has not been impacted. The net debt for the company stands at around 500 odd crores. In terms of acquisitions now within the hospital space, remember that there have been 3 deals worth 700 crores just in the past 1 month. So deals have been struck by the likes of Apollo Hospital, Krishna Institute of Medical Care, as well as Narayana Health. Fortis says that they are in a position, in fact, to go for a massive expansion at this point in time. They are looking for assets to acquire, have a good amount of brownfield expansion on the cards, which is adding 1,500 to 1,700 beds. And they will look at acquisitions in certain clusters as well going forward. Remember, most hospital companies have said that it is a plug and play kind of impact, focus on acquisitions which are a strategic fit, either therapy-wise or either geographically. We did speak to the management of Fortis earlier in the day, like we mentioned. Listen in to what he had to say.
The hearing was actually completed last year. So we have been waiting anxiously, but we hear that the judgment is imminent at any time. Within this month is what we are hearing from our lawyers. So we are just keeping our fingers crossed that it should happen this week or the following week. Our metrics are very good and we are in a position to go for a massive expansion, and we would be looking at potential targets to acquire as well. We have the capacity to do further mergers, but we would go strategically first in the areas where we already have our presence, and then secondly, if there are any opportunities where a preformed cluster in an attractive location and at an attractive valuation is available.
That's the word coming in from Fortis. But moving on, the IRDAI has asked insurance companies to dematerialize all policies. Now, this is big. And what will be the fallout for depository and insurers? A complete explainer later on the show. Stay tuned.
Welcome back. Well, equities are doing well, have been doing well. So let's talk about another asset class, the rupee, which has appreciated around 0.5% to nearly 79 to the dollar as banks have sold dollars. Bond yields also have started lower in the morning despite a higher than expected inflation reading last evening from India. Lata has more. Lata, over to you.
Well, the clear performer of the morning has been the currency. The Indian rupee is 0.5% higher compared to the dollar. All the other Asian currencies are about, 0.01, 0.02. They are flat. So this is an outstanding performance, and the rupee has gone from 79.52 to nearly 79 to the dollar by noon trades. The reason appears to be a one-off. There seems to be a large, dollar inflow that came into the country some time back. It reached the bank's books. They hedged it. And today the cover ends, the hedge cover. So they had to, sell off those dollars. And that's how the dollars have hit the spot market as well as the NDF market. So this is a bit of a one-off, though you have to admit that there are the longer-term positives, which is that equity flows have started. Bond flows are expected to start when the bond inclusion happens. And the dollar index also is off its highs. So generally, it's a pro-rupee scenario or a pro-EM currencies. But this one-off buy contract, which banks are reversing today, is the one that is created this huge rally in the rupee today. We shouldn't expect this ferocity of the rupee rally to continue. But generally, there is a bit of a pro-rupee or a pro-Asian currencies syndrome because of the feeling that the dollar has peaked off. Bond markets, again, was a surprise performance. Bond prices were higher and yields lower in early morning trade, when you would have actually expected the opposite, because the August inflation was higher than what the street expected. CNBC-TV18 poll was expecting 6.84. It has come in at 7. It's also higher than the 6.71 of July. And food inflation was definitely higher than what the economists were prepared for. Nevertheless, the market is not even ruffled, and that's because it's only looking at one thing, the inclusion in the bond index. The meeting should be about 3 to 4 weeks from now, and the JPM Bond Index Committee, and the expectation is that they will announce the inclusion, although it may be deferred maybe by 6 months or something like that. The other important point is, in spite of the higher than expected inflation, most of the economists, especially I want to refer to two economists, the ones from SEBI, from SBI and Citi, are expecting that RBI will hike maybe at best by 35, but more likely by only 25 basis points compared to that 50 and 40 basis that they were hiking in the last two monetary policies. The reason is that already one front-loading has happened, but more importantly, the way in which the finance minister spoke a couple of days back, seeing that the centre is also picking up a lot of flack on inflation, as well as some dovish comments coming in from the MPC member, Ashima Goyal.
All right, Lata, thanks a lot for that. Well, that's on the rupee and the bond market. But let's move on. By the way, the equity markets are picking up in a big way. Just wanted to point out a couple of stocks. Kajaria Ceramics is up almost about 5% and that one has resumed its uptrend in a big way. SRF, we've spoken about that ad nauseum, looking very good. Some of these specialty companies that were on the back foot for a while, names like Alkyl Amines, etc., are up almost about 3.5 to 4%. And some of these names like Polycab, Endurance Tech are all picking up quite a bit of pace. So lots happening, not alkali metals, but Alkyl Amines is the one I was talking about. Big traction there. But as reported earlier on CNBC-TV18, the insurance regulator IRDAI has mandated that all insurance policies be dematerialized. Yash has an explainer on who benefits from this move and the costs involved for insurance companies. Take a look.
CNBC-TV18 had reported on September 6th that the insurance regulator was considering mandating that all insurance policies be dematerialized. On the 7th of September, we told you that the mandate has indeed come through. Let's now dive deeper and look at the big beneficiaries of this move, and the cost involved for insurance companies. Let's spend a minute to look at what this dematerialization move really means. All new policies issued from December 2022 will have to be compulsorily issued in a demat form. And by December 2023, all old or existing policies will have to be brought on the demat platform. Many relate this move to the dematerialization of shares. The move would mean converting physical insurance policies into modifiable online policy. Insurance policies will be put on a separate demat platform called the EIA, or the Electronic Insurance Account. This EIA will have all policies belonging to an individual, like his life insurance, health insurance, or motor insurance policy. What does it mean for policyholders? Since all policies belonging to an individual will be in one account, servicing these policies can be done all at once rather than reaching out to individual insurance companies. Dematerialization will remove paperwork and physical policies. Finally, policyholders will be able to take loan against their insurance policies just like they do against shares. Now, let's get to the meat of this story. Who benefits? Well, in long run, this will benefit insurance companies, but the depositories are the ones who enable this process, and they will be the big beneficiaries. NSDL, CDSL, CAMS, Carvi are the big depositories analysts are focused on. My calculation suggests that the depositories here could have an opportunity to double their revenue. Why do I say that? Life insurance industry sold around 3 crore policies in FY22, and the cost of dematerializing a single policy estimated by insurance companies and industry experts is around 50 to 60 rupees per policy. That would give depositories an additional revenue of about 150 to 180 crore rupees. General insurance companies, they sold 50 crore policies last year. The same calculation on dematerialization cost will give depositories an additional revenue of 2,500 to 3,000 crore rupees. Finally, the old active life insurance policies will also have to be dematerialized. There are 30 crore life insurance policies, and dematerialization of these policies will bring revenues of about 1,500 to 1,800 crore rupees. All put together, there could be additional revenue of around 4,150 to 4,980 crore rupees for the depositories. Compare this to the current revenue which depositories make. NSDL's revenue in FY22 stood at 821 crore, CDSL's revenue stood at 606 crore, and CAMS was about 927 crore. A very, very conservative estimate would show that these depositories could easily double their revenue. Now, insurance dematerialization will certainly entail a cost for insurance companies. This right here is a breakup of the annual recurring cost and the one-time cost which big insurance, both life and general, will have to take towards dematerialization. On the positive side, insurance companies will save the printing and the delivery of physical policies. Dematerialization will also restrict frauds. Also, it will improve the renewal ratios and hence the persistency for these insurance companies.
Okay, all right, Yash, thanks very much for that comprehensive view. We need to now, however, cut across to Parikshit Luthra, who's in exclusive conversation with the Chief Economic Advisor.
Economic Advisor V. Anant Nageshwaran. Mr. Nageshwaran, thank you for speaking to us. We've seen retail inflation rising to 7%. This is above the RBI's comfort level. How concerned are you?
No, I'm not very concerned because this is to be expected given the base effects that indices normally face. And the market is also probably overreacting, the food markets, to the possible lower sowing on the rice crops, and therefore building in some expected shortage, and therefore the prices are reacting in advance. But as soon as the market comes to know that there are adequate food grain stocks and that the sowing shortfall isn't as big as is being made out to be, then I expect the current spike in the food prices to moderate themselves over time.
Right. Going forward, how do you think India is poised in terms of managing inflation? Several steps have been taken. Restrictions on food exports, restrictions on wheat, restrictions on sugar, rice and broken rice as well. But somehow food inflation remains a concern. what more steps would be needed to manage inflation?
I think food inflation or fuel inflation do not get necessarily addressed by the central bank monetary policy except for second round effects. So therefore, more administrative measures and ensuring adequate stocks and making sure that the availability is ensured for the needy segments of the population, and that would make sure that any increase in local domestic prices in response to international prices, it turns out to be as limited as possible. So I think this is more a situation for administrative measures rather than for monetary policy measures.
Going forward, what would be your outlook in terms of the impact on India due to some of the decisions taken by the US Fed and the European Central Bank?
No, I think by and large, India has weathered the monetary policy tightening in developed countries very well. And I think financial markets are also quite aware that India has a fairly resilient economy. And while we are concerned about 7% inflation, and rightly so, we must remember that compared to what other countries are going through, our inflation rate is highly manageable and in the middle level of the range that we are experiencing across developing and developed countries. So even if the Federal Reserve continues to tighten, the market will see through that in the next year. Developed economies will probably have an economic slowdown, which will lead to a reversal of monetary policy, and capital flows will therefore move towards regions which offer them the higher returns, and India is one of them. So in that sense, I don't think India has much to worry about further tightening of monetary policy in the developed world, including in the US.
Finally, the global slowdown, fears of a recession in the United States, other developed economies. This is affecting India's export story as well. Will India be immune from all these global developments?
You have to look at the global slowdown in two aspects. One is the impact on exports, which you pointed out, but the other is the impact on capital flows. As a recession comes into focus in developed countries, what will happen is the market will start pricing in easier monetary policy, more accommodative policy, and the reversal of flows that have gone back to the US to come back to developing countries, including India. And therefore, I see this financial flows and capital flows aspect of a slowdown to be much stronger and more powerful and more beneficial than whatever unfavorable effects we would face on account of export slowdown.
Right. And finally, do you also feel that it's probably time to ease some of the export restrictions on some of the industries, such as steel?
No, that depends on sector by sector. One cannot give an omnibus answer. It has to be, sector specific.
All right. Thank you very much for speaking to us, sir.
All right, that's the Chief Economic Advisor. Not too concerned about retail inflation at the moment, but on food inflation, he does say that administrative measures are more important than any kind of monetary policy measures in order to curb food inflation. All right, let's do one thing. Let's slip into a short break. We'll get you more on the markets and on individual stocks on the other side of the break. Stay tuned. Okay, plenty of stocks hitting fresh highs and the market momentum is intact. It's still a very, very bullish day so far. Sachidanand Uttekar joins us on the show to help us, understand what's happening. Sachidanand, it's great for the bulls, of course. So many stocks, right, are coming back into fashion. I mean, look at these stocks like KRBL, for example, 12.5% higher now. That stock is up 50% for the year. You have the return of names like Polycab, Navneet Education, Wonderla Holidays, all these stocks at fresh highs. Your thoughts on the mid caps and anything that stands out for you that one can trade even for the rest of the day?
Good afternoon, Sonia. Clearly, I think, you mentioned it earlier, there's a lot of euphoria in the market and it is better to focus on quality. I think the focus right now is on the FMCG pack. In fact, we have Britannia, which is, looking mature. It has been consolidating for the last 7 weeks. We have evidence of short covering here, especially if you look at the technical parameters. 5 and 20-day exponential moving average are converging, which is a sign of momentum. So probably we may see this particular range breakout getting established on Britannia soon. So we are focused on Britannia. We are focused on quality. From a trading perspective, we are expecting a price target of around 38.20 on the higher side. The positional target is resting somewhere close to 3900. The stop loss should be placed at 37.10 and long position should be added in Britannia. The other stock that has been trending well and which we have been recommending every now and then on this particular platform is Tata Consumer. Again, if you look at the daily structure, we saw a very confident breakout from a cup and handle formation on 1st of September near the 820 mark. Post that, we have not seen it residing. In fact, the strength has been increasing. The pattern target is placed somewhere close to 900. The trading target is placed at around 880. So we still keep on recommending this particular counter to our clients as well. The stop loss should be placed at 835, and long positions can also be added in Tata Consumers.
Okay, all right. You're talking about the consumption stocks. I just had a quick question on a lot of these broader market stocks which are buzzing today. Say, for example, a Coffee Day, which is up around 20-odd%. Even Nagarjuna Fertilizer from the entire fertilizer space is up around 5-odd%. HT Media is up 4%. DB Corp is also seeing double-digit gains. Anything technically that you would recommend, or would you just steer clear?
Well, I would, stay with the quality right now, because we have already seen this particular rally, extending further. We have evidence of a lot of these small cap stocks outperforming, but still, I think it is better to focus on the quality name mid caps and the large caps. I think if you look at some of the large caps, even they have started trending higher. So probably it is better to stay with the quality when the markets are rising right now, and again hitting hitting close to their 52-week high. So it's better to be with the quality names, and I would stay away from names like Coffee Day.
Welcome back, and joining us on the show now is Surendra Mehta of India Bullion and Jewelers Association. Mr. Mehta, thank you so much for joining us. I want to start with the silver price move that we saw overnight, up by nearly 5%. And we do understand that there were some short squeeze that led to the silver prices gaining there. The money manager's short position has been the highest since 2019, and that clearly saw some unwinding happen last night. But how sustainable do you see the current silver prices? Mr. Mehta, hi, can you hear my voice?
Yeah.
All right. I was asking you about the silver prices, where we have seen a short squeeze overnight. Do you see the current prices sustaining?
Well, definitely. See, because there are 3-4 factors which we need to see. The silver was hit as far as the price of silver was concerned. The silver prices went down almost to $17.5, which was much lower than the price of other precious metal. Secondly, the silver demand is constantly increasing across the world, including India, where you can see the demand for silver in the first 6 months has exceeded the last total year's demand. The current import in the first 6 months itself is about 5,000 tons, which is more than the last 4 years. So, silver being the industrial usage, there is an accumulation by the industries also. There is an accumulation by the investor also, and I see all these reasons, the major reasons for increasing the silver prices. I foresee that there can be a resistance somewhere near $17.8, but it is likely to shoot up to $21.3 in the next 15 to 20 days.
Mr. Mehta, when you look at this year, yes, we have seen a huge, big range come in for silver. In the international markets, we've done a high of 27 this year, and as you said, 17 on the lower side. So a $10 range in the global markets. For the Indian markets, it has been 51,000 rupees on the lower side, 71,000 rupees on the higher side. So it has been a 20,000 range here as well. Are you looking at this volatility continuing going forward?
Well, absolutely, yes. We also have to consider one more aspect as far as silver is concerned. The lease rates on silver has been rapidly rising across the world, including countries like India and other Asian countries. And whenever we have seen that the lease rate on silver are increasing, the prices of silver will shoot up like anything. Last year, when we saw that the lease rate of silver increased, we saw the jump in the silver prices in Indian market almost to 76,000 rupees. So probably this is the best time I see that silver prices will remain volatile, and it's a good price to buy silver.
So while, of course, we are into a festival season, wedding season soon coming in upon us, you said there is a strong demand in India. We are looking at record imports already for this year when it comes to silver. What kind of buying are we looking at? Is it more physical? Are people now looking at ETF buying as well when it comes to that metal?
Well, absolutely. As far as Indian are concerned, we have seen very good investment demand, and especially silver bars are in huge demand in our country.
Okay.
Most of the industries are also accumulating silver, and ETF demand. Silver ETF has just started, and it has started picking up in countries like India. So I think silver will remain speculative, volatile, but it is going to go higher and higher only.
Okay.
Okay, all right, Manisha. Thanks very much for that. So that's the update coming in on the commodities space. For the markets, the Bank Nifty is holding with a gain of around 0.5%. So no real stress coming into the markets. In fact, even the small cap index should probably just come up for you. There's some traction within the broader markets. The mid cap index is up around 0.3%, but the small cap index is doing better, up close to around 0.5%. But off the day's high now. We need to take a short break. Up next, more stock-specific action. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. For now, the market is all guns blazing. Just wanted to point out that there are a couple of pockets of stocks that are looking very good. All the rice stocks are picking up with quite a bit of pace this afternoon. KRBL is up almost about 13%. Volumes are pretty high there, and it's done almost a 50% rally this year, KRBL that is. Then you have something like NLT Foods that's up almost about 12% this week itself, so doing very well there. And apart from that, specialty chemicals have come back in a big way, not just the names like SRF, but something like a Lakshmi Organics is also up about 9% right now. And it's had a very rough run this year. Most specialty chemical companies have had it weak this year, but now they're coming back in a big way. So Lakshmi Organics is one stock that's looking pretty good. Overall for the market, it's all guns blazing. Global cues are also quite positive, so that's really aiding the market uptrend. Just a few and far between in the red, whether it's Cipla, Dr. Reddy's, a tad bit in the red. Otherwise, most Sensex and Nifty components are trading well in the green. With that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.